Hi guys, good to see you here. This video is about stock market basics. Let us go to the content now. In this video, let us discuss the ways the stock market functions and how to trade in it. For beginners, it is important to know what the basics of the stock market are and how it functions. The stock market is a place where anybody can buy and sell a stock or stocks of a particular company. When big companies need extra investment for their expansion, they issue IPOs, and through this, people buy the stock and hold. By doing so, the person who bought the shares becomes a part of the company, and in return, the company issues the stock to that person. Now it is up to the person who holds the stock to keep it for years, for the value to get appreciated or sell immediately. That individual decides. This is enough for beginners because other things about the stock market and how it works will be learned in the process later. Better not to confuse you now in the initial stage. What do you do if you want to do stock trading? You have to open a demat account with any broker and link the bank account to that. If you contact any demat broker, they will guide you, get the necessary documents from you, and create a demat account and trading account for you through which you can trade. There are many well-known brokerages where you can open your demat account, but before opening the demat account from a broker, you have to check the brokerage fees they charge because it differs from broker to broker. Better to go with good, well-known brokers that are also cost-effective. After opening an account, you will be given a demat account number, and after being authorized by the stock exchange, you will be able to trade in any shares or buy and sell any shares. This is the initial way to start stock trading. For beginners, it is highly advisable to focus on buying stocks when the market is favorable and selling the stock when you get a profit. By doing so for a few months, you will gradually understand the pros and cons of the stock market, its volatility, and how it fluctuates. Please press the like button if you like this video and also share. Beyond this, the stock market provides you with a system called futures and options, shortly known as F&O. In F&O, there are two types of trading methods, the futures segment and the options segment. Futures segment trading requires more investment. Options segment trading requires less investment. You need more investment for the futures trading segment, but the risk is lower, whereas you need less investment in the options segment, but the risk is higher. Please do not forget to subscribe and please press the subscribe button shown on the bottom corner of your screen. Apart from that, there is also a segment called commodity trading, where you can buy and sell commodities like crude oil and natural gas. There is another segment called currency trading, but most people don't get involved in this segment. In currency segment, trading are done with the currencies of the world. To pick stock to buy, go to Google search and search for blue chip companies which are the top performing companies of the respective countries. The search will provide you a list of blue chip companies, and from that, do some research on that company and buy. Why choose blue chip companies initially? Because when the market gains, the blue chip companies give you returns at the same time. If the market falls, the blue chip companies' fall is limited. So your investment is safeguarded to some extent, unlike investing in small or mid-cap companies. Okay, the main thing now is when to buy the stock. For this, as a beginner, it is difficult for you to time the stock. That means, in the stock market world, it is known as the time at which you buy. For this, your brokers have given you, in their trading website or app, a section called Chart. Now, in the chart, it will show you a default chart of your broker. In that, you type your stock name, and the chart will change to your stock chart. In the chart, at the top, you can see an item called Indicators. It will ask you to type what indicators you need. better type an indicator called Relative Strength Index, or RSI. Now, below that price chart, you can see a new chart added to that, which is a Relative Strength Index chart. If the indicator line of the RSI is on the top, don't buy. Wait until the line comes down. When the line reaches the bottom or a little above, then you have good chances of the price of the stock moving up, and now you can buy, and after a certain period of time, you can sell and make a profit. But do not hold the stock if the RSI is nearing the top. You have a leverage called MTF, that is Margin Trading Facility, by which if you have 2,000, you can buy up to 8,000 or 10,000, which is called leverage. It will be generally 4 to 5 times your investment. It depends upon broker to broker. Try to do this for some time or some months. I know I have given only limited information in this video. In a few days, I will bring you the other trading segments details of futures and options. Thanks for watching.